Hey everybody, Gary with Basecamp Trading. Let's take a look at a nice trade we had in crude this morning. This is our 30-minute chart in crude. Today was EIA day in crude. It was a bearish report. Crude initially pushed up actually off of the report. Then you left this big topping tail right here and actually closed under support under the 200 and the 50 EMA. Again, we know the 50 and 200 are significant support and resistance. You can just look how many times we reacted to these levels. I mean, you can go back into the London session and look how many times you hit and moved off of these levels right here. We finally got a close underneath them, triggered to the downside on a bearish bar, left the topping tail, body of the bar was all selling, and that actually triggered a channel breakout on our Unirenko chart, and that was the trade we took. So we had a bearish 30-minute confirmation, 513 crossing to the downside, bearish momentum. Our momentum was crossing to the downside. So we had bearish momentum, bearish price action, and our moving averages crossed the downside. So we had 30-minute confirmation confirming our channel breakout. And you can see that crude had put in a significant pivot high and a significant pivot low right here. And then we started chopping inside there. We were pivoting up and down inside there. And then we broke out of this channel. And as we were breaking out of this channel, that's when we were triggering that 30-minute shooting star. And this is our large bar chart, which is a 4-tick trend, 10-tick offset, and a 20-tick reversal bar. So each bar is 4 ticks to the downside. And this was a nice move. We were able to grab potentially up to $600 per contract on this. And we had a pretty solid area that we were going to take profits on, and that's how we were able to lock in $600 pretty much to the tick. And that was because as we were coming down, this is our 240-minute chart, we came right down into the 50 EMA. Right there, came right down into the 50 EMA on our 240-minute chart, and you can see we still are not underneath it. We popped underneath it a little bit, and now we're back above it yet again. We know on the 30-minute chart and the 240-minute chart that the 50 EMA and 200 EMAs are significant support and resistance lines, and you can see that crude made a nice push down off of that trigger and then stopped right at the 50 EMA. So that was a great place to take profits, and that locked in our $600 per contract. So nice short channel break setup in crude today.